Hello, and welcome to the Pricing for the Planet podcast, the podcast that explores the intersection of business and sustainability. I'm your host, Fabian Cross, and I'm here to figure out with you how to make sustainability a competitive edge. Indeed, for us, the only path to amplifying and accelerating sustainability is by framing it as the driving force for business. Whether you're a business leader, an entrepreneur, or simply curious about how sustainability can be monetized, our podcast is here for you. Today, I'm super happy to host Philippe Zaouati, founder and CEO of Mirova. Philippe is a pioneer of green and sustainable investments. He has also contributed to the French government's environmental policy and even helped draft parts of Emmanuel Macron's presidential program on the environment. Philippe, thanks for being here.
Thank you. Hello.
So, Philippe, we have a tradition in this podcast. We start from the end. So, what the one key takeaway you would like our listeners to remember from today's podcast?
Whoa. So you're going to be surprised because I think that clearly monetization and pricing is clearly not the good way to solve the sustainability crisis. So let's move forward, and I will try to explain you why I think it's important and why I think it's not the only thing to think about.
Perfect. So Philippe, so you are the CEO of Mirova. You are at the helm of a pioneering company in sustainable investment. Can you share a bit about your journey and what led you to this role?
Yes, of course. So Mirova was created 10 years ago, and it's part of a kind of journey. I started after the financial crisis in 07, 08, when not only me, but all the financial community, discovered that the complexity of the financial market and also the opacity of the market, and the fact that it was not only targeted to the general interest, but also was starting to work for itself. Was not the good way moving forward, and that it has clearly been one of the origin of the crisis, and so we were a couple of people from the financial industry at that time to think about how could we do it better, how could we use finance, which is a very, very powerful tool, and absolutely key in the way our economy and society is moving. How could we use it to solve the issues and not creating new issues, and to solve more especially the environmental and social issues that we were facing. And so that was the beginning of responsible investments at a larger scale, because responsible investments already existed, but of course we wanted to put it at scale, and so we started to work on this in 09. Starting 09, and then it led to the creation of Mirova in 2012, with the idea to create a company which could be a kind of proof of concept that sustainability and finance could go together, and that we could really manage money for the behalf of our investors, delivering good performance, delivering results, but at the same time being very focused on our convictions, which were to make a positive environmental and social impact. So today we are about 300 people in Paris, London, Boston, Nairobi, Singapore, and we are still focused on this objective. We manage about 30 billion euros in different asset classes: equities, fixed income, infrastructure funds, private equity, natural capital. And we have the trust and confidence from a lot of investors all around the world, which is the first good signal.
Yeah. Well, congrats. That's impressive. So you are talking a lot about sustainable finance. For example, in your books, like Green Finance Begin in Paris, Sustainable Finance Ringing in a Second Chance. For our listeners who might be new to the concept, could you break down what sustainable finance really means?
That's a question which could lead to hours of discussions, but there is no definition. I mean, at the global level, there are a lot of regulation today which are clearly asking for more transparency about what sustainable finance is. A lot of people are speaks about ESG, environmental, social, and governance. But at the end of the day, it's about clearly connecting finance and general interest, understanding that finance is not a passive tool, that it's clearly an active, should be proactive, and that we clearly not just use finance just to allocate money to the projects which are the with the higher return and the lowest risk, but also try to understand that the choice that we are making in financing this project and not this one is clearly shaping the future. And so that's clearly the objective of sustainable finance. I mean, understanding that anyway we have an impact as when we finance the economy, and so financing is making choices. That's I think the most important fact, most important difference between sustainable finance and traditional finance.
Makes sense, super clear. And there is another term that you frequently, like use. It's impact investing. Can you explain, the difference? Is it, the same idea? Is it different? What are the nuances?
For me, it's the same idea. I mean, every 5 years we change the name.
Yeah.
That's that's a kind of marketing move. No, I mean to take it seriously. Yeah, when I started, we used to speak about socially responsible investments. Then the acronym ESG has become more familiar to everybody, and today ESG is not seems to become also old-fashioned, and more especially because in the US it has been the target for a lot of pushbacks, more especially from the Republicans, and so they say that today they say that ESG is woke finance. So that means that there is also this question about how can we explain what we do, and with one word it's always difficult. Impact is interesting, but there are also some issues with the impact world, because when you listen impact, you think, I mean, the first objective is to make an impact and not to deliver return. And so there is always this thinking about, is it impact first or impact with a return, which doesn't exactly mean the same. So at the end of the day, what I think is that there are a wide range of different expertise and different way to do sustainable investments. And even if you look at the Mirova's portfolio, there are very different things that we do at Mirova. We manage sustainable equity, global equity, large cap portfolios, and at the same time we manage funds which invest in the restoration of degraded land in emerging countries, and that's clearly not the same. So you can you could try to find one word which describe it, but that's difficult. It's just different ways to use financial innovation to find solutions for sustainable development. So the only word that I think is really encompassing all these probably is Mirova.
Perfect. Yeah, like that. And Following up on this idea and the way you started the podcast, because in this podcast, we are trying to figure out the best way to scale sustainability. And you mentioned, pricing and monetization might not be the best way. So question for you, what would be the best way to scale it?
No, it was a kind of joke to start our discussion, of course, but I think that this is important to understand the objectives, and then there are different tools that we can use. And I think that financial innovation, more globally, has sometimes been used for the worst when it was about creating very complex CDOs and CDO squares during the financial crisis. So today, the idea is there is a lot of smart people in the financial industry. There's a lot of innovation. Let's try to use this financial innovation for the good. So when we create a new investment tool like green bonds or green loans, when we use blended finance to structure investment funds to invest in emerging countries, when we use guarantee, first losses, and so on and so forth. All this is really technicalities, innovation. But the idea is, what are they used for? It's the aim is more important than the tool itself. And so monetization and pricing, that are one of the tools which are embedded in the way financial system is working.
Yeah.
The point that I want to make is that don't be. We should not be. Blind. The at the end of the day, we are working in a financial system which doesn't work very friendly for sustainability. And it's a system which is very short-term oriented, very focused on profit, whatever it comes from, and pricing, and we all think that the market is discovering every day the good price for everything, which I think is not true. And so of course, pricing is very important, but we need to have a look at pricing very differently. As how can we use it to really describe the reality of the impacts. That means integrate in the pricing all the externalities and all the impacts.
Yeah, 100%. And we talk a lot about true pricing, 3P pricing, and all those tools, but 100% align with you. So I had one question, because I know that you have those criticism as well. We have the same at Pricing for the Planet. There is a lot of skeptics who sometimes label our sustainability initiatives as greenwashing, or feel the efforts being made are insufficient anyway. How do you respond to such criticism?
Okay, that's clearly insufficient. We know that all this is insufficient. We know that we are lagging a lot compared to what will be needed to solve the climate crisis, for example, or the biodiversity collapse. But saying that we are not doing what we should do, that doesn't mean the same that what we do is useless. So it's not enough, but I don't think it's useless. We have done. We have been, clearly changing the way the financial system was behaving in the last 10 years. Sustainable finance clearly did not exist 10 years ago, and today it's at the heart of all the discussion, even very polarized discussion. But that's probably also a good, not a bad news, but a good news. If we have so strong pushbacks, uh, that means also that we exist, that we have changed something. Then, of course, there is greenwashing everywhere, not only in finance but everywhere, and there are different kind of greenwashings. There is the cynical greenwashing, which is of course awful, and when we see it, we need clearly fight it. That's for sure. But there are more, different greenwashing, more less visible greenwashing. Like a lot of first, a lot of um, players in the industry in finance who do little things but speak too much about the little things they do. And that's a kind of greenwashing. And there is a new one, which is not really greenwashing, is what now some people call greenhushing, which is we don't want to speak up because it's too dangerous to speak up. And so let's do things, but don't speak about this. So this is the opposite of what I was saying before. But both are not the good way. We need to explain what we do, even if we think it's dangerous, even if we think it's not enough. But transparency, clarity about what are our objectives and what we are doing, I think is the right way to behave.
Perfect. Yeah, I like that. And talking about transparency and discussion and debates, recently there has been a significant discussion around the concept of double materiality. Emmanuel Faber, chairman of the International Sustainability Standard Board (ISSB), emphasized in a piece for Le Monde the need for a unified approach to extra-financial accounting. Can you shed some light on this debate and help our audience grasp its significance?
Yeah, some observers described it as a fight, a kind of a discussion between the European way and the American way, which I think is not the right way to describe it. Of course, there is the European way in terms of regulation. So the European Commission came with a very ambitious plan to encompass double materiality, which means looking at the impact of the environment on the companies, but also the impact of the companies on the environment, even when it's not financially material for the company itself. So it was really, it is very ambitious, and the CSRD directive is about this. Um, but it's not only the European against the American, because even within Europe, there are a lot of big companies and big lobbies, who have really pushed back a lot the CSRD directive. And on the other way, there is the international organization, the IFRS Foundation, so which is at the heart of the accounting system, which decided to create a subsidiary. A kind of a specific subsidiary for sustainability, which is the ISSB, International Sustainability Standard Board, and they were smart enough to give the chairmanship of the ISSB to a European, very well-known leader and a sustainability leader. Because Emmanuel Faber is a sustainability leader. And so it has been very, strange and very difficult for the sustainability community in Europe to understand that and and just to find its way in this new discussion between the ISSB on one hand, which is clearly about financial materiality itself, and the European Commission, which was on double materiality. What I think is that there is no big problem to move on both ways. Basically, we are not going to convince the big American companies and even I don't know, Chinese or other companies in all over the world to move to double materiality right now. So the fact that Europe is ahead of the curve is good, and we should continue to be ahead of the curve. That's very important, and I think I have the conviction that the European regulation could become a global regulation. We have the power to create global regulation starting from Europe because of our economic power, because of our links with all the other countries and other region in the world, with the trade and all that stuff. So we can move at the same time on something which is ahead of the curve in Europe and a kind of global platform for sustainability all over the world. And it's normal that we have some discussion between the two approaches. That's not bad. To have some discussion and to explain that we disagree. And so I was a little bit sad when I read the paper from Faber in Le Monde a couple of weeks ago, because it was just saying there is no possible discussion. What you are doing on double materiality is wrong, and that's it. And so I think it was not the right way, the good way to move forward in the discussion. And so this was the reason we answered to this paper with also an op-ed in Le Monde that I co-signed with Pascal Desmurger, the head of Mouvement Impact France, last week. And I think that now, it's just more probably calming down a little bit. And so everybody understand that there are different approaches. And the important fact is that we can find bridges between these approaches in order for the companies to navigate into this very complex world the easiest way.
And just for the audience, can you explain very quickly what double materiality means in case they don't know?
So, basically, double materiality means that you look at the company as a player in an environment with very different stakeholders. Nature being one of the stakeholders, but also people, employees, clients, and so on and so forth, territories. And obviously, every enterprise, every company has impacts on its environment. Some of these impacts have consequences on the business of the company. For example, if there is carbon price and you emit a lot of CO2, then you will have an impact on the environment through your emission, but your emissions will also have back an impact on your business because of the carbon price. Some of the impacts sometimes have no consequences on your business and on your P&L, on your bottom line. Let's say you are polluting a river and there is no regulation in the country where you do it. Then you can continue to do it. There is no impact on your business, but there is a big, strong impact on the communities, on the environment. So double materiality is just saying you have to look on both sides. What has an impact on your financial accounts and your business, but also what has no impact on your business, but has an impact on the environment.
Yeah, super clear. So Philippe, for those inspired by today's conversation and eager to join the sustainability movement, what advice or guidance would you offer?
Whoa, that's a difficult one. I think there is so much to do that there is not one advice, and I think that there are different ways to work for sustainability, and I don't think we should separate the different ways. For example, some wants to clearly go outside of the existing system and do I don't know, organic agriculture, and then go back to the land and stop working on in big companies. And we have seen a lot of students, saying that I'm giving up. That's enough. I'm going back to nature. So some others want to do the revolution, and some others want to use technology and to use what they have learned at school to create new technologies, to find solutions for sustainable development. And all this is okay, I think. I'm sure that we need all this. And that there is not one solution because the situation is so complex, so different, so spread in different industries and geographies that we need a coalition. But the important thing is that we don't think that the choice that we are not making is a bad choice. We need to, again, to create coalitions, to make bridges between the different ways to do this. So clearly, changing from the inside is not easy, but is also clearly one way that we should explore.
Perfect. And so if any of the listeners want to follow Mirova or follow you, I know you are very active on LinkedIn. What can they do?
Yes, of course, I am active on LinkedIn. I think it's really important to engage with. Engagement was at the heart of the creation of Mirova 10 years ago, and so we engage with companies in which we are investing. We engage with policymakers. We engage with regulators. We engage with NGOs. We engage with students, with young people. So that's really very important to increase really the discussion. So I mean, yeah, feel free to contact me and to contact Mirova to apply for I don't know, whatever, internships, jobs, but also to participate to this discussion and to engage yourself. That's clearly the best way, and probably the way we will meet one day or another.
Perfect. Thank you so much, Philippe. That was, super interesting. And for the audience, thank you so much for joining us today. We hope you found it insightful and inspiring. If you want to stay connected with us, learn more, and continue this sustainability journey and discussion, please subscribe to our bi-weekly digest on www.PricingForThePlanet.com and follow us on LinkedIn. As Philippe mentioned, you can also follow Philippe Zaouati and Mirova on LinkedIn. But listeners, we also need your help by leaving a comment and rating this podcast. You are not just giving us feedback, you are also helping boost the visibility of those critical discussions. Every comment, every like, every share help us reach more people and spread the word about our mission. Thank you for your time, your interest, and your commitment to sustainability. Be well.